Yeah, Honourable Minister, you're required to provide a treasury memoranda within 6 months as provided for under the PFMA. Next item.
Item 8, motion for adoption of the report of the Committee on Public Accounts, Commissions, Statutory Authorities and State Enterprises on the report of the Auditor General on the financial statements of Kampala State Council Authority for the financial year ended 30th June 2022.
Chair.
Right Honourable Speaker and members, I beg to lay on table and present the report of the Committee on Public Accounts, Commissions, Statutory Authorities and State Enterprises, COSASE, on the report of the Auditor General on the financial statements of Kampala City Council Authority for financial year ended 30th June 2022 and other matters. I beg to lay the report and the attendant minutes thereof. Honourable Speaker, again, I will skip a couple of things, but for methodology, I'll read a bit there for emphasis. In consideration of the report, the committee held meetings with 1. The management and staff of Kampala Capital City Authority, 2. The Minister of State for Kampala, 3. The Lord Mayor and Councillors of Kampala, 4. The Acting Secretary, Uganda Land Commission, and 5. Ruth Chijambu, former Acting Town Clerk of Kampala City Council, as it then was. I'll move to findings, observations, and recommendations. Item 1 there is about revenue performance, and there's a few sub-items. 1, underutilization of warrants. Out of the total warrants of 313.6 billion received during the financial year, 303 billion was spent by the entity, resulting in an unspent balance of 13.56 billion, representing an absorption level of 95.7%. The unspent funds were swept back to the consolidated fund as is required by the Public Finance Management Act. Some of the funds that were not absorbed were meant for the following activities, which were subsequently partially or not implemented at all. And we show a table. Some of this money, 1.7 billion, was meant for payment of general staff salaries for health workers. 3.1 billion was payment of salaries for secondary school teachers. The committee observes that failure to absorb funds deprives beneficiaries of the intended services. 2, there was no documentation to support the submission by the accounting officer that a request for the said staff was made to the relevant authorities at the time of this audit. Number 3, there was reluctance on the part of the management of KCCA to address this matter. While the recruitment of the relevant workers ought to have taken place before June of 2022, the correspondences seeking for a supplementary wage provision was authored much later, in November of 2022, several months after the end of the financial year. The committee recommends, number 1, the accounting officer should always make timely follow-ups on the matters to ensure proper utilization of funds budgeted for. 2, KCCA management should liaise with the Ministries of Education and Sports and that of Health to expedite the recruitment of teachers and health workers in order to enhance the much-needed services in the aforementioned areas. The other item under that is implementation of outputs and activities. The Auditor General could not assess the implementation of all the 46 outputs with 316 billion with 137 activities, since they were not fully quantified. The Auditor General was further not provided with the individual directorates' work plans to confirm the quantification of outputs. I'll run to the observations. The committee observes that failure to quantify outputs and activities implies management weaknesses in quantifying performance and hence affects service delivery by the entity. And we recommend that the accounting officer should ensure detailed work plans for all directorates are in place at the start of every financial year to enable quantification and measurement of all outputs and to enable performance measurements. The other item is delivery of services from implemented activities. There's a table, Right Honourable Speaker and members, that we share that shows a couple of projects that were incomplete. Some were classroom blocks, hospitals, and so on. I'll not run through that, but it shows a detailed breakdown. I'll run to the general observation of all of this. The committee observes that the failure to complete the various projects satisfactorily meant that the facilities could not be utilized, but also led to loss of time and money. And the committee recommends that the accounting officer should ensure timely and satisfactory completion of all the projects within a period of 3 months after the adoption of this report. The other item is procurement of 39 office chairs, 14 tables, and 5 desks, and procurement of 7 ambulances and 5 motorcycles for provision of emergency medical services contract that was awarded. The accounting officer informed the committee that the total expenditure on furniture in financial year 2021-2022 was 135 million and not 2.14 billion as reported, and that 50 as opposed to 39 chairs were purchased at a cost of 32.5 million. These were delivered on August 19th, 2022. Regarding ambulances and motorcycles, the accounting officer submitted that the ambulances cost 1.61 billion and the motorcycles cost 52.5 million, bringing the total to 1.66 billion and not 3.7 billion. She further submitted that both items were part of the COVID-19 responses. The ambulances were delivered. The Auditor General informed the committee that through a letter that his office asked KCCA to provide a breakdown of the figures spent on these items, but the information was not provided. The Auditor General therefore captured the block figures. The committee observes that there was a discrepancy between the figures of the Auditor General and those of KCCA, and we recommend that the Auditor General should revisit this particular matter in the subsequent audit. The other item, Right Honourable Speaker and members, is management of public land, and one is about encumbrance on public land. It was noted that out of 242 pieces of land measuring approximately 184.8 hectares held, 24 pieces measuring 36.79 hectares valued at 34.6 billion had been encroached upon by the local population. The accounting officer submitted that most encroached upon land was in Nakawa, Kasenge, which was purchased for constructing a landfill in 1997, but where KCCA did not take immediate possession, and the 64.4 acres, approximately 26 hectares, was inhabited by squatters. KCCA filed a case against the squatters, and there is a reference there, KCCA versus Yosia Masengere and others. I'll move to the observations. The committee observes that management of KCCA has over the years neglected to safeguard and take possession of some of its land, which has resulted in 2 squatters that have lived on the land for many years. 2, no evidence was submitted to indicate the efforts undertaken by management to stop encroachers on KCCA land in the various places. 3, encroachment hinders management's ability to utilize the land and poses a risk of loss of land. The committee recommends that KCCA management should secure possession of its land and keep track of the court proceedings to resolve all forms of third-party claims in order to ensure uninterrupted utilization of land for service delivery. The other issue is titling and transfer. It was noted that out of 184 pieces of land measuring 184.8 hectares held, 48 pieces of the land, that's 37.7 hectares, did not have land titles. The committee observes, I'll run to the observations, that management did not submit evidence of engagement with the stakeholders in the matter, that is Buganda Land Board and Uganda Land Commission, which casts doubt on their commitment to obtain the various certificates of title. 2, lack of certificates of title exposes KCCA land to encroachment, disputes, and may result in the loss of land. The committee recommends 1, the accounting officer should actively engage the relevant stakeholders to obtain certificates of title for all untitled land and update Parliament on the progress of the same 6 months from the date of adoption of this report. 2, the Auditor General should audit all of KCCA land in the next subsequent audit. 3, management of domestic arrears. And we start with outstanding long-term payables of 42.5 billion. It was noted that the authority had a long-term liability of 42.5 billion on its balance sheet that arose from a development credit agreement entered into on 12th of August 1991 between IDA and KCC on behalf of government for the improvement of waste management in the city, production of up-to-date Kampala maps, and strengthening of the financial and personnel management systems and services. The loans have never been serviced, and the outstanding balance of 42.5 billion has remained on the KCCA books as an obligation pending clearance, even though the authority does not have the capacity to settle this obligation, and the chance of repaying this liability is remote. The accounting officer stated that the Accountant General had been engaged for the last 5 years with no conclusive response. The committee observes: 1. Several letters have been written by the Executive Director of KCCA to the Ministry of Finance since 2013 about the matter. 2. On 30th January 2023, the Minister of Finance wrote to the Attorney General seeking for guidance regarding writing off a number of loans that were unrecoverable, including that of KCCA that were kept on its books of accounts and queried several times by the Auditor General. The committee recommends that the Attorney General should provide guidance on this loan and how it should be dealt with within 3 months. The guidance should come within 3 months from the date of adoption of this report. Outstanding domestic arrears of 24.9 billion. Section 21(2) of the Public Finance Management Act states that a vote shall not take any credit from any local company or body unless it has no unpaid domestic arrears from debts in the previous financial year, and it has the capacity to pay the expenditure from the approved estimates as appropriated by Parliament for the financial year. Further, paragraph 10.9.17 of the Treasury Instructions of 2017 states that an accounting officer will ensure that no payments due in any financial year remain unpaid at the end of that year. Contrary to these legal provisions, it was noted that the authority had outstanding commitments to the tune of 24.9 billion at the year end. The accounting officer explained that management was committed to adherence and to the commitment of the control system. However, most of the large payments are for road construction projects, which are multi-year in nature, and the payment timelines are hard to predetermine. In addition, the outputs of the subsequent year budgets were taken care of in the multi-year planning. However, the risk of litigation continues to loom over the authority. The committee observes that accrued domestic arrears adversely affect budget performance in the subsequent year, as outputs anticipated in the appropriated budget may not be attained due to settlement of arrears. This may also result in litigation for non-payment of services already consumed. The committee recommends that management should ensure that all major works, especially multi-year projects, are allocated sufficient funds to avoid arrears which attract interest on delayed payments. Non-remittance of statutory deductions. It was noted that by the end of the financial year, KCCA made statutory deductions amounting to 4.1 billion, which had not been remitted to the respective institutions as shown in the table below, contrary to paragraph 10.23.1 of the Treasury Instructions of 2017. And the table there shows payee 2.5 billion, that's to URA, withholding tax 17.2 million to URA, and then NSSF contributions 1.49 billion, the total there being 4.1 billion. The accounting officer explained that management was constrained with the budget to process these outstanding statutory payments, but was engaging government to allocate additional funding. She said the bulk of the outstanding payee and NSSF were related to the remittances of June 2022, which had since been made according to her. She further explained that the delays to remit NSSF contributions for casual workers was caused by delayed registration, and that the remittances of all those that had successfully registered were made, while registration was continuing and remittances were continuously made. The committee observes that 1. Failure by KCCA to remit statutory deductions in time was a breach of the law and an infringement on the rights of workers, and affects the overall government budget and exposes the authority to fines and penalties. 2. The failure to remit NSSF contributions leads to financial loss to employees, given that they cannot earn interest on unremitted contributions. 3. The shortage in funding as an explanation for the delay to remit the statutory deductions was not tenable, because statutory deductions are paid on salaries. The committee recommends that the accounting officer should immediately pay all outstanding NSSF contributions plus accrued interest to the employees. 2. Always prioritize the payment of statutory deductions and remittances to avoid penalties and jeopardizing the livelihood of employees. Number 4, delayed commencement of the Kampala Rehabilitation Project. According to the project appraisal report of 2019, the project implementation period was to start in June 2020 and be completed over a 5-year period, including 1 year of the defects notification period. The ED of KCCA was responsible for nominating a project coordinator acceptable to the bank for the day-to-day management of the project and constituting a project implementation team comprising a civil engineer, procurement expert, an accountant, environmentalist, and a social economist. It was noted that the project had delays in commencement due to some factors such as delay in obtaining necessary project approvals and lengthy procurement processes that involved obtaining the bank no objection and contracts committee approval before advertisement was done. I'll run to the observations. The committee observes that delays in commencing projects leads to low absorption of funds and non-implementation of planned activities which affect the project's overall performance. We recommend that the accounting officer should fast-track all key project activities to avoid further delays in project implementation. Number 2, ensure that the necessary loan documentation is submitted to the loan appraisal unit in time to the Ministry of Finance and subsequently to the respective approval authorities to avoid delays. The other item is nugatory expenditure, interest on delayed payments, amounting to 94.8 million. It was noted that the authority delayed settling the interim payment certificate number 20 for works executed by MS Enago project on the reconstruction and or upgrading of various roads in Kampala, contrary to Public Procurement and Disposal of Public Assets, PPDA regulations. We observe that nugatory expenditure denies the authority the resources to implement its other planned activities. And so we recommend that the authority, KCCA, and its accounting officer should ensure the expeditious review of payment claims and settlement of approved certificates and invoices in time to avoid nugatory expenditure. 6. Implementation of Youth Livelihood Program. It was noted that since the program's inception, 4.6 billion was disbursed to various youth groups in the 5 divisions of Kampala. However, only 1 billion has been recovered, representing a recovery rate of 22%. It was further noted that some groups have never made any repayment to the tune of 1.2 billion. I'll quickly run to the observations. The committee observes that failure to recover funds from the beneficiary groups may lead to the non-achievement of the intended objectives of the revolving fund. 2. The fact that some groups had not made any payment was an indication of not doing due diligence on the groups before the loans were disbursed. The committee recommends that 1. The accounting officer should devise more effective mechanisms of recovering funds from the youth groups. 2. The Ministry of Gender, Labour and Social Development should re-examine the implementation of the Youth Livelihood Program with a view to improving its performance in order for the program to benefit the target groups. 7. Delay to operationalize the 2019 Outdoor Advertising Ordinance. It was noted that on the 23rd of April 2020, court ruled that the authority was irregularly collecting fees from outdoor advertising. In the ruling, the authority was barred from budgeting and collecting any outdoor fees until proper regulations on outdoor advertising rates had been put in place. However, it was noted that the authority had not yet developed regulations on outdoor advertising rates. Therefore, no collections were made during the year. Although the authority in the financial year 2019-2020 collected 3.5 billion before the court ruling that halted collecting of these fees. The accounting officer explained that a draft outdoor advertising ordinance was prepared with the input of the relevant KCCA technical staff and was presented to the City Executive Committee, which made their input, after which the draft ordinance was submitted to the Authority Council. Observations. The National Outdoor Advertising Contractors Association Limited brought an action against KCCA, and that's the reference therein, seeking for an order certiorari quashing the decision of KCCA approving the outdoor advertising rates, contending that the rates were illegal, irrational, and unlawful, and the declaration was that the 13.7 billion, which were rates and fees and other charges unlawfully levied, charged, collected, and received as outdoor advertising rates by the respondent from the applicant's members since 2011, was illegal and unlawful. The applicant sought for the same amount as damages. On 23rd of April 2020, the High Court held the applicant was entitled to a refund of all the money and other charges unlawfully levied and received as outdoor advertising rates by the respondent from the applicant's members since 2011. On 2nd of December 2020, in miscellaneous cause number 407 of 2019, an amount of 8.2 billion was formally proved in court as the decretal sum and 2.6 billion as taxed costs and interest, making a total of 10.8 billion. Despite the fact that KCCA is not collecting any advertising fees, several billboards continue to be erected in the city unabated. As a result of the absence of an enabling law that allows for the levying and collection of advertising fees, KCCA has lost and continues to lose income. The committee recommends that the council should fast-track the approval process of the draft advertising ordinance to enable the authority collect revenue from outdoor advertising, and the accounting officer should report to Parliament on the same within 3 months from the date of adoption of this report. 8. Human resource management, and we start with vacant positions in the authority. A review of the authority's organizational structure indicates that out of the approved 1,454 posts, only 825 were filled. I'll run to the observations, Right Honorable Speaker. The committee observes that staffing levels of 56.7% are low, and this makes it difficult for the entity to properly execute its mandate. 2. The staffing gaps are key positions which negatively affects the level of public service delivery. 3. Whereas many of the higher positions have been filled, several staffing gaps for lower positions remain, notably in the areas of health and education. The committee recommends that the Ministry of Finance should provide funds for the recruitment of all the requisite staff for KCCA. Number 2, the accounting officer should ensure that all appointed officers assume duty as soon as possible. Number 9, management of schools, operation of unlicensed and unregistered schools. A review of the status of licensing and registration of schools in Kampala indicated that only 865 out of 1,927 schools were registered with KCCA, representing 45%, while 928 schools were not registered and licensed, representing 48%. The balances of 134 schools were provisionally licensed. The provisional licenses for 102 out of 134 schools had expired, exceeding the 2 years in operation, and had not been renewed, implying that the schools were operating illegally. It was noted that except for the schools which were issued closure notices as far back as 2018, but are still operating, other schools had never been issued closure notices by KCCA. I'll run to the observations, Right Honorable Speaker. The committee observes that out of 1,978 schools in the city, only 79 are operated by KCCA, an indication of the inadequacy of the authority to provide education services. The numerous primary schools indicate an attempt to fill a void in the education sector in the city. 2. The number of unlicensed schools indicates inadequate supervisory capacity on the side of KCCA and the Ministry of Education and Sports. 3. Understaffing and an inadequate budget for KCCA make it difficult for the authority to effectively supervise schools. We recommend that the accounting officer should review the operations of the Education Directorate to further improve its capacity to manage licensing of schools adequately and achieve its intended goals and objectives. 2. The Ministry of Education and Sports should put in place measures to improve licensing of all schools and collaborate with the management of KCCA regarding supervision. Review of KCCA mandate. There was absence of a City Public Accounts Committee. I'll run to the observation. The committee observes that the absence of the City Public Accounts Committee means that the recommendations of the Internal Audit Department, the reports of the Auditor General, and other investigating agencies may not be reviewed and implemented. Further, it becomes difficult to confirm whether the city's corporate governance structures are adequate. The committee recommends that KCCA should always ensure that the accountability committees are in place to attend to reports of the Internal Audit and the Auditor General. 10.2, failure to prepare implementation report for Kampala Physical Development Plan. I run to the observation because it's clear-cut. The committee observes that in the absence of the implementation report, it becomes difficult to confirm the extent of implementation of the planned activities and the achievement of the intended goals and objectives. The committee recommends that the accounting officer should expedite the process of preparing a report on the implementation of key PDP to enable the evaluation of performance and inform the next strategic direction in the area. This should be done within 6 months from the date of adoption of this report. Management of information technology investments in government, and then there's also manual preparation of financial statements. The entity does not use an automated system to prepare financial statements, which would improve accountability and reporting. The committee observation that the entity was preparing financial statements manually using MS Excel, which is prone to errors due to human intervention and manipulation. The committee recommends that management should acquire an automated accounting system for the preparation of financial statements within a period of 6 months from the date of adoption of this report. Management of public land, and we start with utilization of land for service delivery. It was noted that out of the 242 pieces of land measuring 184.8 hectares held, 3 pieces, that's 1.7 hectares, valued at 9 billion, were not utilized by the entity at the time of the audit. I'll run to the observation. The committee observes that unutilized land is susceptible to encroachment and grabbing, and we recommend that KCCA expedites the process of leasing out all its vacant land to raise revenue. The other item, irregularities in management of leased lands. Regulation 6 of the Land Regulations of 2004 requires a lease offer made by a board or the commission to communicate the offer stating the terms and conditions of the offer conditioned upon payment of fees and other charges in full or by installment. A review of the lease file and MOUs held by the authority revealed the following. 1. 2 leases of land measuring 0.6 hectares had expired at the time of carrying out this audit. 2. 1 piece of land measuring 0.45 hectares leased out had not been developed as per the conditions of the lease agreement. Out of the lease rentals of 1.5 billion expected in the period under review, the entity only received 620 million, which is 41%, hence an under collection. No leases of land were renewed without payment of ground rent arrears or development of land as per the lease agreement. The accounting officer explained that all leased properties are subjected to compliance through physical planning and no extension is approved without a compliance report. One of the lessees had complained of encroachment which was being addressed. The authority was also taking measures to increase collection from lease rentals. We observe that irregularities in lease management processes of land wholly controlled and owned by KCCA negatively impact on revenue collection. And the committee recommends that the accounting officer should strengthen internal controls surrounding lease management and ensure that proper lease agreements with clear terms are signed with prospective lessees. Parish development model. 1, budget performance, and there's a table there showing challenges. The committee observes, I'll move to the observation. The committee noted that in the absence of a detailed work plan, it becomes difficult to confirm whether the detailed activities were properly costed and spent for the intended purposes. The committee recommends that the accounting officer should ensure that detailed work plans are prepared within 1 month to guide the implementation of activities under parish development model. 2, absorption of PDM funds. It was noted that out of the total receipts of 1.5 billion, 373 million was spent, representing an absorption level of 24.3%, leaving 1.16 unspent by the year end. And there is a table there showing. The committee observes that failure to absorb the funds was caused by the absence of guidelines for the formation of SACCOs. 2, under absorption of funds results in delayed or non-implementation of budgeted activities and delayed achievement of the program goal of financial inclusion. The committee recommends that the Ministry of Local Government should ensure that all guidelines necessary for preliminary activities, such as the formation of SACCOs, are provided before the disbursement of funds. The other is failure to transfer funds to PDM SACCOs. That one is self-explanatory. The committee observes that the SACCOs were not in place because there were no guidelines regarding how they would be formed, and therefore funds could not be released to non-existing entities. We recommend that the accounting officer should ensure that all the SACCOs are formed according to the guidelines to enable them receive funds in subsequent financial years. Then contradictory implementation of guidance and directives from different departments. The committee observes that contradictory guidances to implement as of the PDM causes disharmony and impairs coordination in the implementation of PDM activities. And we recommend that the management should liaise with the PDM Secretariat and review the various guidelines issued and harmonize guidance given to the implementers of PDM activities. Quota awards and compensation. In 2016, government decentralized the payment and retirement of quota awards from the Ministry of Justice and Constitutional Affairs to the relevant ministries, departments, and agencies. Under that still, there is lack of adequate budget for liabilities from quota awards and compensations. It was observed, going down, that KCCA budgeted for 6.8 billion for the settlement of these liabilities relating to quota awards and compensations, although the quota awards and compensations payable by 30th of June 2021 were totaling to 23 billion. I'll run to the observation. The committee noted that failure to provide resources for the settlement of liabilities results in delayed settlement and further accumulation of interest on the outstanding debt. And we recommend that the accounting officer should continuously engage Ministry of Finance, Planning and Economic Development to request for additional funding to settle these litigation liabilities. Then there is lack of criteria for management of these quota awards, and we recommend that management expedites the process of developing formal guidelines to streamline quota awards, compensation management and settlement within 3 months from the date of adoption of this report. Then management of pension and gratuity, and then I run further down, under budgeting of pension liability to the tune of 1.9 billion, and there's a table that we show there. I'll not run through that. And we are saying KCCA should always make provision for sufficient budgets for pension and gratuity. Then there's under absorption of pension and gratuity, 343 million. There's a table there which I'll not run through. And we are saying the accounting officer should expedite the process of pension verification and setting up beneficiaries on IFMIS to ensure that all pensioners are paid on time, because that's part of the challenge. Then timely access to pension payrolls. And we are saying that management should always start the process of data capture with the Ministry of Public Service earlier and provide clear and early guidance to pensioners, especially those from tertiary and secondary institutions. Then payment of pensioners without life certificates, that's another challenge. And we recommend that management should expedite the follow-up of all unverified pensioners and circulate reminders to enable them file their updated certificates with the authority as soon as possible. The other matters, and this is the last section, which would take about 5 minutes, I suppose. Plot 71, Kruma Road. The committee took interest in the matter relating to Plot 71, Kruma Road. The land is comprised in Freehold Register Volume 208, Folio 24. I'll leave those details. KCCA operated a clinic on the said property until the land was leased to MS Securex Amenities Uganda Limited on 21st of February 2012. The events leading to the relinquishment of the land were as follows. On 8th of April 2010, the then Mayor of Kampala City Council, Alhaji Nasser Antege Sebagala, in a letter wrote to the acting town clerk of KCC indicating that MS Securex Amenities had submitted a proposal to redevelop Plot 71 Kruma Road into a modern parking facility with a private health center and other commercial services, and that according to the application of MS Securex Amenities dated 6th of April 2010, the company was offering to create a facility that has more parking spaces in addition to other commercial services and a health facility run by KCC, in line with the council's interest of providing health services to the people. And there's an annexure attached of the letter. According to the mayor, the project was commendable and would generate more revenue to the city council. He noted that Uganda Land Commission was in the process of granting a lease to the company. He stated that he was of the view that since it was a viable project, the acting town clerk should proceed to formalize the recommendation as long as the new redevelopment project was in line with the current planning standards. On 12th of April 2010, via the letter, the then Secretary of Uganda Land Commission, Mr. Mubala, wrote to the town clerk informing him that the commission was in receipt of an application for that property from MS Securex Amenities, which would be a beneficiary, and there's an annexure. Right, Honorable Speaker and members, allow me to run to the observations. The detail therein has the annexures as well. The committee observes as follows. Number one, Securex Amenities Limited versus Securex Amenities Uganda Limited. The letter from the Secretary of the Uganda Land Commission dated 12th of April 2010, wherein reference to the application for a lease was made, referred to Securex Amenities Limited as the applicant. However, the communication to the acting town clerk by the personal assistant of the mayor dated 12th May refers to Securex Amenities Uganda Limited, which is a different company. The response to the letter of the Secretary Uganda Land Commission, also by the acting town clerk, referred to Securex Amenities Uganda Limited. There is no record of the existence of Securex Amenities Limited at the Uganda Registration Services Bureau. What was provided to the committee when a request was made were documents relating to Securex Amenities Uganda Limited. Even then, Securex Amenities Uganda Limited was incorporated on 27th May 2010, which was after the grant of the lease, meaning that this lease was granted to a non-existent entity. The shareholders were Ntaganda Ephraim 80 shares, Mutabaruka Innocent 10 shares, and Kanabi Bob 10 shares. In a letter to the Commissioner Surveys and Mapping by the then Secretary of the Uganda Land Commission dated 18th June 2010, the request for deeds was made with reference to Securex Amenities Limited and not Securex Amenities Uganda Limited, and there is an annex here attached on the report. On 24th of April 2012, Securex Amenities Limited, which was non-existent, created a sublease of 45 years to Securex Amenities Uganda Limited. There is an annex here attached. On 21st February 2012, Ntaganda Ephraim transferred all his shares as follows: 60 to Wachamba Constance, etc., etc. And on the same date, these people also transferred. There is an annex here. On 15th of March 2012, Wachamba Constance and Wanamono Shem transferred their shares to Mahmoud Barwani and Mrs. Shaida Barwani, who also became directors. Resolutions to that effect, dated 22nd March, were also registered and attached. The fact that the transactions and exchange of the property was based on mere nominal fees for shares of the company and the speed at which all this was done is suspect. The property was subsequently purportedly mortgaged. The committee recommends that the certificate of title be cancelled and the register be rectified to reinstate Uganda Land Commission as the registered proprietor. 2. KCCA should initiate processes of ensuring that after the cancellation of the title, KCCA is registered as the user entity. 3. All the officers involved in this fraudulent transaction should be investigated and prosecuted by the Inspectorate of Government. The other item is cost of city roads in Kampala. The committee's attention was drawn to the high cost of road constructions in Kampala at an average of 10 billion per kilometer, and we have an attachment. A study, the committee did make a comparison study. A study by the Ministry of Works and Transport indicates that as at 2020, that's the Ministry of Works and Transport Consultancy Services for a unit cost study of road construction and maintenance in Uganda. It indicates that a kilometer costs about 650 million US dollars. That's about 2.4 billion for roads under 70 kilometers and 2.1 billion for roads under 70 kilometers. We're juxtaposing that against the unit cost of Kampala roads. That is 10 billion, there's one of 15, and there's another road of 24 billion per kilometer, not the entire road. KCCA management submitted that the cost was much higher due to additional elements like pedestrian walkways and traffic lights on some of the roads. The committee observes that not all roads had pedestrian walkways or even traffic lights, and therefore the high cost per kilometer is not justifiable. The committee recommends that the Auditor General conducts a special audit into the cost of roads in Kampala within 6 months from the date of adoption of this report. The other item was dire condition of city roads. The committee noted the dire state of most of the roads in the city, with many of them having huge potholes, which not only cause traffic jam but also damage motor vehicles of motorists. Many of the roads had not been repaired for a long time, and there was a public outcry about the same. The accounting officer submitted that they too are concerned about the poor state of roads in the city and have received numerous complaints about the same. However, they have limited funding for road repair. She further said some 6 billion had been recently extended to the entity to fix the potholes, but that this was a drop in the ocean. She said the entity requires about 100 billion per year to be able to comfortably take care of the roads in the city. The committee observes that the poor state of roads is not only bothersome to the city dwellers, but also projects a bad image for the capital city of the country. We recommend that government should provide adequate funds to KCCA to regularly repair roads and construct new ones. Consent judgments. The committee noted a matter where some people who had been hired by Public Service Commission to work at KCCA were not taken on by the entity. These disgruntled people went to court, and there is a cited case, and KCCA entered into a consent judgment with them for payment of 3.7 billion, which was the total amount they would have earned had they worked at KCCA for a period of 5 years. This was a consent judgment. KCCA management explained that the consent judgment was neither approved by the legal team nor the accounting officer. The matter was handled by one Mr. Charles Ouma, the former deputy director in charge of litigation, and Mr. Richard Lule, the former director of human resource. These have since gone, that's why we are saying former, but at the time they were present. The committee interacted with the two individuals who are now former staff of KCCA. Mr. Charles Ouma submitted that this was done in the interest of the entity and to save the entity a huge loss that it would incur in costs had the matter proceeded on trial. Our observations as a committee. Management of KCCA filed a case before court challenging the consent, and we have indicated the details there. KCCA argued that the consent was entered into without the approval of the Central Executive Committee. The court held, among others, that the internal workings of the applicant, that's KCCA, is their business, and any person dealing with the institution could not ascertain whether the applicant's directors did not have any authority to sign on behalf of the institution. Number two, the decision taken by Mr. Charles Ouma together with Mr. Richard Lule, whom court says was part of the negotiation for a consent judgment, was improper, especially because it did not get the approval of the leadership of the entity. The committee recommends that the Inspectorate of Government investigates the two individuals for their unilateral role in this matter. Number 6.4, plans to, and this is the last one, plans to acquire land for vendors. The committee learned that KCCA was in the process of acquiring 10 acres of land in Chisenyi at a high price of $100 million US. That's 370 billion shillings, meaning 37 billion per acre, from a one Bosco Muwonge to resettle vendors who usually operate on the streets of Kampala. The committee visited the location and found that KCCA had already settled many traders on the said land. The committee also learned that there was a family claiming to be the rightful owners of the land and not Bosco Muwonge. The family took this matter to court and it is yet to be disposed of. The accounting officer submitted that whereas KCCA was interested in the land, it was still conducting consultations about the issue with the Ministry of Finance. She further submitted that KCCA had in the meantime entered into an understanding with the said Bosco Muwonge to settle the vendors on the land as discussions and consultations about purchase ensue. Our observations. The committee